All right, good morning, guys. My voice is a little messed up from yelling at the game playing Tekken 8, but anyways, I want to go over this buy trade that I took this morning on ES. And I want to go over how I basically got that trade idea. It all started last Saturday. So in my Telegram, I said right here, well, this is on February 8th. Jerome speaks 2 times next week. No surprise after the manipulation Friday. I'm prioritizing longs on futures until price begins working below January lows. Too much buy side liquidity is built up right now. So this was going into the close of the market last week. This was basically from the news of, if I'm not mistaken, CPI. Was it CPI we had last week? Let me check. Yeah, no, sorry. Friday was NFP. I don't know why I'm thinking about this week. But yeah, last Friday was NFP. And NFP drove the market really low because of the news of the 3% inflation number, which was worse than expected. But we had so much buy-side liquidity built up. It just didn't make sense for price to continue going lower into this week. At least to me, it really didn't make sense from a technical standpoint. So looking back at the chart, this is what I saw from the daily chart. So if you look at this, and I have S&P on the left, NASDAQ on the right, take a look at, I'm just going to move this back one candle. Take a look at the buy side liquidity. We have the previous day's high in line right next to Wednesday's high. We also have previous week's high here, and then we have all-time high all the way over here at 6160. Okay, on NASDAQ, it was very similar where we had previous week's high here at this 21,968. And we also had Tuesday's high still untouched, as well as all-time high still untouched. There was just a lot of levels that price could reach for to the upside. And what I was saying in the chat, inside of my Telegram, was how entities, like large entities, whether it be banks, hedge funds, whatever it is, they were still trying to short early after market open. It was around like 10 or so, which I'll show you in the chart in a second. But I had put in the chat that they were still trying to sell when the algorithm doesn't work that way. There's just too much buy side liquidity built up, and soon after price started to rally. So coming into the day this morning on Thursday, this is the 4-hour chart. You can see how on the chart on the left, look at these relative equal highs here. So you have the high from the 11th and the high from the 12th. Very close, relative equal highs here. And this is where price was early this morning in London session. All right. But if you look at that on NASDAQ, you can see that we're actually reaching into a 4-hour buy side imbalance. I was not sure if this was going to hold. The only thing I was pretty confident on was that price wanted to go higher. So as I dropped down to the 1 hour, I had my London range drawn out from 2 a.m. to 4 a.m. since that was the high and low for the morning. And you can see on the right, you see where price has reached into that 4-hour imbalance. And now we're kind of like just sitting in the middle of the range from this high to this low. Again, at this point in time on the 1 hour, this is 5 a.m. Since I don't take any trades before 9:30, I will just show you kind of the price action that I'm looking at as we approach market open. So at that time, price was reaching into a sell side area here on the 1 hour. So I'm pretty sure you can see that this area here is untouched, which sits right in front of London session high, but price was actually already reaching into another sell side imbalance here. So to get things kicked off, if price was going to go higher, it needed to invalidate this first. And this is actually something that was seen on both markets. S&P was a little bit more clear. So you can see how much larger the space is over here. And so if this is going to go higher, you'll see this imbalance where price goes into it. You will see this invalidate, find support, and then continue going higher. Or it could just be a straight shot higher, right? Either way, price is unlikely to reach London session low on both markets if we are likely going to go higher. So going towards market open, here is our 8:30 release. And I'm just going to back this up a little bit because we did have news at 8:30. So you can see how price never reached external liquidity down here at London session low. So there's the failure of the 1 hour level, and the 4 hour is now starting to take over. This is what's starting to show that price wants to go higher. Now, here's the thing. Where is external liquidity for this 4-hour level? On NASDAQ, because the gap came from this area on the 4-hour, external liquidity is here at the overnight high, okay? So this right here would be the target that you're looking for price to go to. I'll draw that out. Now, even though this high up here is your immediate target, if I zoom out, take a look. Right above that, we have previous week's high. So because these are so close, I would expect price to go right up into previous week's high, and then potentially, and look at the space between previous week's high and all-time high. It's much more than from our target to here. So I'm not counting on this, but I am counting on target here and previous week's high for sure. As NASDAQ pushes to those two areas, it will likely drive ES to follow into previous day's high as well as previous week's high. Now, because previous week's high is so far away, again, I'm not really counting on that. I'm really looking at previous day's high, which was Wednesday and Tuesday. Tuesday and Wednesday, these relative equal highs to be hit as NASDAQ is hitting previous week's high. All right. So where's the entry? My entry actually came in right here on ES, this 15-minute imbalance right here. Now take a look. Where would I put my stop if I was getting into this long position? On the surface, I actually was thinking about going here, all the way below this swing low, but 15 points it's a large stop for my target, right? Because the target, it's pretty close to where price is right now. So what I ended up doing was taking this wick, finding the equilibrium, and putting my stop loss there. So I took a fib, measured the half point from the low to the body of the candle, and I placed my stop just under that midpoint there. From there, I targeted 2R, and it just so happened that the 2R was right above previous day's high. Again, an area of liquidity that I was expecting to get hit. And so here's the outcome. I get tapped into the trade pretty quickly, but look at the drawdown that I went through. If my stop wasn't in an area of support or resistance, it's likely I would have been stopped out, right? You can see it. If I had my stop anywhere near the gap, I would have likely been stopped out. But because I didn't want to risk all the way down here, I just mitigated where I could. I reduced the risk by putting it right underneath the midpoint of that wick, and I was able to get out at 2R. Price did go on a little higher towards previous week's high. Hasn't gotten there quite yet, but you can see both areas were hit on NASDAQ. All right. So that was my trade for this morning, and here is the recording.